It is the last trading day of the Biden administration. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Sonali Basak.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, the clock is ticking for TikTok. The Supreme Court is set to rule on the app's shutdown as the incoming President Trump pledges an extension.
And mining M&A, Rio Tinto and Glencore have discussed combining their businesses, what could result in the industry's largest ever deal.
And the U.S. plans to negotiate lower prices for Ozempic and Wegovy, which, of course, are Novo Nordisk's blockbuster GLP-1 drugs. Novo shares down sharply pre-market. All of that and more coming up. But let's take a look at where the broader markets are trading right now. We have a rally on our hands on this Friday, at least in the pre-market session. You can see the S&P 500, the Nasdaq 100, both up mightily right now. Remember, we saw some enthusiasm at the open yesterday. That faded by the close, but for at least right now, quite a rally to end the week. Same story, too. If you take a look at the bond market, yields down a little bit at the long end of the curve. The 10-year Treasury yield currently down about 3 basis points. We are below 460, Matt Miller.
Yesterday, Scott Bessent said discretionary spending is up 40% in the past 4 years. We have new functionality on the Bloomberg terminal. This is ECAN Go, E-C-A-N Go, and you can see all of government spending broken down into the most minute detail. In green here, you see debt servicing costs now at more than $100 billion a month. This is something that the next government is going to have to tackle.
It's such a circular issue, isn't it? If you can get that green line down, then you have debt servicing costs lower, but also maybe you have that 10-year, if it stays below 4.6%, that could start to happen a little bit anyways. We'll keep an eye on all of that. Novo Nordisk, we're watching, as Katie said, down bigly, 4.4% pre-market, sliding after news that Medicare price negotiations will target Ozempic and Wegovy. We're also looking at Intel shares jumping after a report from the website Semi-Accurate. The website said that the company may be an acquisition target. We've already been watching Intel. It's up almost 8% now pre-market. We have been talking about potential asset sales. Let's see where the story goes. Bumble also up 6.2%. They say that founder and executive chair Whitney Wolfe Herd will become CEO. She's coming back to that top spot effective mid-March of 2025. A lot of news changing at the top ranks of companies these days, Matt.
All right, we also have breaking news out on the global growth outlook from the IMF. They are raising their 2025 forecast to growth of 3.3%. And the reason for that is stronger growth right here in the USA. So it does look like U.S. exceptionalism continues to be a theme in 2025. Katie, what do you think?
Absolutely. I mean, the biggest upgrade among the major economies, U.S. GDP rose 0.5 percentage points to 2.7%. This is what we've been seeing in the stock market, right? You think about the resilience of the U.S. economy, the strength of American companies, particularly American tech companies, and then you take a look at the rest of the world. It doesn't look too good. At least that's what we hear from some of the bulls that we speak to on this program.
Right, and it should give the Wall Street crowd a reason to be a little more bullish as well. The estimates coming into this year were all over the place. You saw people looking at below 2.5%. Soft landing scenarios were still being baked in. This rise in the IMF projection should at least give a little bit more confidence for that U.S. growth story.
Let's bring in Alex Chaloff right now, Bernstein Private Wealth Chief Investment Officer, here with us at the desk. Alex, thanks so much for joining us. Good morning.
Thanks for having me.
Let's kick it off with this, increased growth estimate, and it's really on the back of stronger U.S. as, the next president of the United States is sworn in on Monday. What do you expect for 2025?
Our view is that we'll have good but not great growth, and that's actually perfect. It's a real thread-the-needle situation. We'll have about 1.5% growth, 1.6%. To be precise, is our view for U.S. growth this year.
So that's far less than the IMF. The IMF says 2.7%.
The economists are terrific on one hand and on the other hand and changing their outlook. And I would bet dollars to donuts we're going to have a change in view over the year. By the way, a 2%, a 1.6%, a 2.2%, it's all directionally the same. Modest growth that doesn't kick off another bout of inflation and good results for investors.
It sounds like you might stand a little bit outside of the crowd that I just described, though. When it comes to the global picture, we hear a lot of people that say, don't touch Europe. It's not even worth looking at when you consider what's going on in the U.S. It sounds like maybe you don't buy that argument.
You have to be global, especially now, and especially if you've lived through this U.S. growth cycle where earnings have been terrific, where multiple expansion has been terrific, where the stock price performance of a lot of these companies has been great. Now to pull off a non-U.S. position and say, okay, I give up, capitulate, that this is not the right time. There are some opportunities that exist outside the U.S. We are still U.S. bulls. We still have a majority of assets in the U.S. for our clients. And in fact, we've raised our U.S. weighting this year relative to the past. We are at the highest U.S. weight we've ever had in our model construction, but we still like non-U.S. markets.
Dollars to donuts. Have not heard that one. I'm working on my idioms, as Matt knows. Why do you believe that things might not be as rosy?
I think that we get excited about the U.S. consumer. We get excited about the labor market, but it's a little bit of a sneaky labor market right now. Job growth is good, but behind the scenes, there are a lot more people looking for new roles. And you're not seeing that kind of turnover activity. You're seeing people coming back into the workforce, which is great, but there aren't those kind of lateral moves for better career advancement. I'm going to call it a sneaky job market right now.
What did you think about Bessent's testimony yesterday? I thought it was really interesting that he said, in terms of the TCJA, extension of the tax cuts.
Sure.
This is the single most important economic issue of the day. It's pass, fail. And pass, by the way, means an extension, right? Because otherwise it would be $4 trillion in tax increases.
Yeah, it's reasonable to expect tax cut extension. I think that's a base case that we're modeling. I think everyone's modeling. I think what he's really saying behind the scenes is, you better give this to us, because if you don't, a lot of people are going to be upset. And I think that's going to be the case. Our view is that there will be extension.
Well, let's wrap this into a conversation about what the Fed is going to do. That seems to be one of the big wild cards in the market. You take a look at the Fed speak over the last 24 hours or so. You had Christopher Waller sounding a bit dovish. You had newcomer Beth Hammack saying that we still have an inflation problem. Not a voting member, but interesting to read the different tea leaves there. What do you think the Fed is going to do? Because you take a look at bond traders only pricing in about one rate cut this year. That's right.
That's right. I think this is where the disagreement is greatest, which I love, because that's what makes a market.
We love it too.
Good. All right. We're all on the same page. I think they're not going to do anything until June. So we can all just relax, watch the 10-year bounce between 4.5, and I'm thrilled to see it bounce back down closer to that than when it was up at 4.7. I think there was some I don't want to say panic, but close to, because the 4.7 is 5, and then we're back in where we were in 22. But nothing until June, and then our view today is that there's 3 cuts, and I think that's not a high conviction view, but I think that there'll be at least 2. And frankly, the inflation is coming down. The levels of inflation are coming down, both the Atlanta sticky, Atlanta flexible. You're seeing real reduction there. And I think the Fed will have the support to cut at least twice, and maybe we'll get that 3rd cut.
You know, Alex, I think a lot of what you're seeing in terms of this discrepancy in futures pricing for bonds is that uncertainty around the neutral rate. Going back to the Hammack comments at the end of last year as well, the belief that we're closer to neutral than we think. What do you think?
Well, I think that we're not going back to where we were. There's no more ZIRP. That's over. We're not going to go back up. Our view is that there won't be a re-hiking cycle. I think you'll probably settle in over a longer period of time. Chair Powell still has a couple of years left, and I think they'll be very deliberate during the remainder of his term to move slowly rather than quickly, because they don't want to have a policy mistake. They don't want to have to go back the other way. So I would say elongate the expectation of timing, and we're still going to get there.
All right, Alex, got to leave it there. Always great to kick off the show with you. That is Alex Chaloff from Bernstein. Let's turn to some breaking news that we got this morning, and that is that the U.S. will negotiate the price it pays for Novo Nordisk drugs, including Ozempic and Wegovy. They are the latest drugs that are targeted under legislation that expected to save the government more than $200 billion over a decade if all works out. Bloomberg Intelligence senior pharma analyst Sam Fazeli joins us now. And Sam, you think about Novo's treatments. In the U.S., they have list prices about $1,000 per month. And the last round of IRA negotiations gave Medicare an average of 22% in terms of price cuts. If this goes through, if we see a similar magnitude of price cut, what would this mean for Novo Nordisk's bottom line?
Yeah, thanks for having me on today. This is obviously an interesting day today because this is a date that wasn't supposed to be the release date for the data, although we'd expected the Biden administration to pull this forward from the 1st of February expectation. What does it mean for Novo Nordisk? I mean, look, at the end of the day, they're not going to change their list price necessarily. They're going to end up having to write a check to the federal government for whatever that difference is in terms of the negotiated price. Not sure this will actually help the patients necessarily, depending on the way the plans are operated. So at the end of the day, it does impact Novo Nordisk. It all depends also on the size of their business from Medicare. And I don't think currently that's a significant number because we're still waiting for full coverage for obesity, etc. So in the meantime, it just adds to a flow of bad news for Novo starting just before Christmas for the latest drug, CagriSema.
Yeah, it was wild to see Novo shares actually fall in 2024 after quite the run that they had had in the years prior. I want to talk about what this means for Eli Lilly, because you don't see Eli Lilly's drugs on this initial list. There is some speculation about 2029 maybe. But even if we see price changes for Novo's drugs, what could that mean for Eli Lilly?
Yeah, it actually could help Eli Lilly, which is, a bit, is not what necessarily was the expected outcome in these things, right? Because if the plan operators are not getting the rebates that they were getting before, they're more likely to want to emphasize or favor products where they get the rebate still. And that would mean that rather than Novo writing the check to the federal government, if you end up pushing for the use of Zepbound more, or Mounjaro more than the Novo drugs, that the plan operators get the benefit, and that's an incentive to them. So this is one of the issues with the way that the whole IRA is structured with this price negotiation. And of course, as you know, and Bloomberg has reported this, a lot of the pharma companies have got together asking the new administration to just stop, even though this list has been published, and review what the actual outcome of these negotiations are.
What is your expectation, Sam, for the Trump administration? Because on the one hand, he's expected to be pro-business. It would make sense that he throws out sort of the Biden attempts to negotiate prices. On the other hand, he's a populist president, and people are pretty angry when they hear that these drug makers are charging exponentially more to U.S. patients than they are to, German, British, or Danish patients. Is Trump likely to try and stop these drug companies from exploiting U.S. patients?
Yeah, so I don't think that the new administration would make a significant, or needs to make a significant change to the IRA. It's just that some of these bizarre incentives that are created by its system need to be addressed. If you're now not going to actually have any impact on the actual patient's bottom line, although it depends on the type of drug and how it's paid for, then what's achieved? It's the money is going to the federal government. Are they going to pass it on to the patients? In how is that going to happen? So I think what I hope will happen is that they look at this and say, okay, there are good parts here, and that's great. Sort of capping out of pocket costs, perfect. Negotiating some price, maybe, but let's make sure that the benefit goes to the patient as opposed to anywhere else. Are we incentivizing innovation? Certainly not, with the element where they say drugs that are small molecule drugs that are the most valuable when it comes to generics get a shorter cover. Those are the things that need to be fixed. And I think Trump administration can have its cake and eat it. They can keep and actually make it better for the patients.
Sam, we have to leave it there. We thank you so very much for your time and all of your analysis. That is Sam Fazeli of Bloomberg Intelligence. I also want to bring you now some breaking news. Goldman Sachs announcing it is raising CEO David Solomon's pay from $31 million to $39 million. Interestingly, also, and very notable, the compensation committee approved with the board just yesterday, incentive packages also for CEO David Solomon and John Waldron with a value of $80 million with a 5-year vesting period. These are getting more common on Wall Street, these tens of millions of dollar packages for these executives. In the case of Goldman, also notable, they are instituting a carried interest incentive program that are tied to certain funds at Goldman Sachs Asset Management. These are alternative funds launched last year across multiple strategies. We were talking about Goldman's expansion into private assets. This is tying the executives and their own performance pay to those funds. We will talk more about this later in the show, but of course it's that time of year, it's payday. Now yeah, go ahead.
Well, I was just going to point out, I mean, I always look at the performance of the stock when I hear about the CEO's pay getting increased, right? And if the company is doing well in terms of stockholder appreciation, maybe they deserve it. If you look at Goldman Sachs versus every single other bank on the street, it has outperformed over the past 5 years with total return of 180%.
And they have the second best year ever. So they want to make sure their talent stays on board for the next 5 years as well, particularly as they're going through some significant changes. Again, we'll talk more about that later in the show. But before that, we're going to talk about TikTok. The ban could reshape the social media landscape. We're going to discuss what it means for stocks like Meta and Snap. This is Bloomberg. TikTok is now coming up against a nationwide ban on Sunday, but Donald Trump and his team are working to save the popular app used by 170 million Americans. Bloomberg Intelligence senior analyst Mandeep Singh joins us now. There was a perception that if TikTok were to be banned in the United States, that a lot of that activity would go to the other popular social networking sites like Meta, for example. But you're seeing that not necessarily the case, aren't you?
Yeah, you're right. I think the secret sauce remains the algorithm and the user and the followers that they have on TikTok, which is why the copycats that have emerged, you know, the Red Note and the Lemonade apps, out of nowhere, you know, they seem to be gaining a lot of users. In fact, people have started learning Mandarin through Duolingo because some of these apps have a lot of Chinese content. So clearly, the users who are on TikTok want their graph to be intact, and if any app offers an alternative, they're ready to use that app as opposed to a Reels or a Snapchat.
Yeah. I don't know, because I'm so far away from the demographic of a TikTok user.
I can tell you
but
about it.
Isn't it ironic that the U.S. Congress bans TikTok for fear of Chinese spying, misinformation, you know, malware, and then the TikTok users, this whole Gen Z group, just migrates from one Chinese social media network to another Chinese social media network, also owned by the parent of TikTok.
You could look at that situation and say, oh my gosh, is being Chinese owned the appeal? Because that's exactly what has happened. The memes have been amazing, Mandeep, just to put it simply there. But why isn't Reels having a heyday right now? Basically, if you go on Reels, you see content from TikTok that was posted 2 weeks ago. You think that that would be the natural opening for Reels to really take some market share.
I mean, think about, you know, the origins of social media with the Facebook Blue app. People have their users, their family of friends. There is a graph associated with all these social media networks. It's the same with TikTok. There is a user graph of followers. People know what sort of people consume the content. And even though Reels is owned by Meta and, you know, they have all the knowledge in terms of how social media works, they don't have that secret sauce that TikTok has, which is why TikTok is so resisting in terms of selling the U.S. asset. I mean, that's the secret sauce, and they don't want to give it away.
Is there really a possibility that Elon Musk could end up owning TikTok and combining it with X? Is there no antitrust concern there?
I mean, look, given the closeness of Musk to the incoming President Trump, clearly there is a case to be made. If he wants to expand his social media empire beyond X, then
well, and also the closeness of Elon Musk to the Chinese Communist Party, right?
Yeah, I think they see him as somebody who could be a viable, you know, purchaser of the app, but I still think they will resist, selling the app and trying to figure out a way for the app to work the way they, talked about Project Texas in terms of bringing all the data over and having it audited. So to me, those are the options that the Chinese government is focused on right now for ByteDance.
Really quickly here, do you remember Vine?
Yeah.
I remember Vine. I loved Vine. Vine.
You remember Vine? You must have been 5.
I remember Vine. I wasn't 5. I was in college.
But it didn't have 170 million users.
Yeah.
That was the difference. Yes.
Yeah, that's true.
It didn't make sense at the time, right?
Vine?
But also there was, I think, a 6-second limit. Was that right?
That's true.
So, and TikToks are far longer.
I watched
Reels.
about 3 hours worth of 6-second videos.
At this point yesterday, the ability of the Chinese social media apps to draw in e-commerce and payments is another big draw that the American giants just not have figured out as well.
Yeah, I think Will Shaker actually pointed out that there was a $28 billion economy built around
I
that.
bought my husband's Christmas present on TikTok Shop. It's actually a pretty seamless experience. Mandeep, we have to go. It's great to see you. That is Mandeep Singh of Bloomberg Intelligence. And tune into a full special on the future of TikTok at 11 a.m. Eastern on Bloomberg Technology. But stay here, too. We'll be live at 10 a.m. when we might get a decision. This is Bloomberg. Welcome back to Open Interest. You take a look at futures right now, flying before the bell. The S&P 500 up by about 0.8%. Train your eyes on what's going on with the Nasdaq 100 right now, up 1.7% before the bell rings. Maybe a lot of that comes down to Intel. Of course, we are on Intel acquisition watch. Semi-accurate. That is really the name of the organization that published that Intel is the target of M&A. We knew that, but we got a reminder this morning, and you're seeing Intel react, and you're seeing big tech in general have a great day. The Russell 2000, the small caps also getting in on the action as well, up about 1%. Now coming up, less than 4 minutes to go until the opening bell, we'll discuss the market moves with RBC's Amy Wu Silberman. That conversation coming up next. This is Bloomberg.
Moments away from the start of trading on what will be the final day of the first full week of 2025. We hadn't had a 5-day trading week yet. S&P futures up 0.9%. This could be the big one, folks. It could be a gain of more than 2% this week, as Sonali was telling me earlier. It could be the best week that we've seen on the stock market since election week back in November. NASDAQ futures ripping face right now, up 1.9%, and the small caps are not doing badly either. On the New York Stock Exchange, you see QXO coming out. They got a little kid, which is cute, and they just made a hostile bid for a roofing supply company. It's an all-cash deal, which is more exciting, I think, than a stock deal. And then Restore ringing the bell down on the NASDAQ market site. In terms of the major averages, it's looking good, folks, and Katie Greifeld is standing by with the numbers. Katie, what do we got?
Yeah, so far, about 30 seconds into the trading day, it's a good day for the bulls. You can see the S&P 500 up almost 1%. That's being led in a big way by big tech. You can see the NASDAQ 100 currently higher by about 1.7%. Some big movers there, including Intel. The small caps, too, getting in on the action as well, up about 1% on your Russell 2000. Of course, we see interest rates coming down a little bit this morning. That's providing a little bit of relief to the little guys. Meanwhile, you take a look under the hood, and you can find some red. Novo Nordisk sliding in a big way after news that the U.S. plans to slash prices it pays for Ozempic and Wegovy for Medicare. That, of course, is part of legislation that's expected to save the government more than $200 billion over a decade. We'll have to see how aggressive the Trump administration is in those negotiations. But at least for right now, Novo Nordisk down almost 4%, Sonali.
And Katie, as you remember, on Monday, since Monday, it has been deals driving the move in many stocks. And now it's deal rumors. Intel shares are jumping after a report from the website Semi-Accurate, which said that the company may be an acquisition target. Intel shares now up more than 7% as the market opens. We have been watching a lot of potential event-driven activity around Intel the last couple months.
All right, we're also watching Vistra, one of the best performing large cap stocks of 2024. The shares are down after a fire broke out last night at Vistra's Moss Landing power plant, and also, maybe more concerningly, an adjoining lithium-ion battery facility in Central California. You don't want to see a lithium-ion battery on fire because they're really difficult to put out.
Yeah, no, that sounds super bad. So we'll continue to watch Vistra shares. Can we talk about Intel for a moment here? You think about the fact that, of course, it's called semi-accurate. There's not a lot of detail here either that Intel might be an acquisition target. We already knew that. Why is the stock up 6% right now?
The excitement around it, again, I suppose. Remember, we were talking about Qualcomm. It kind of went away. Now, who else would come in? Maybe Trump would let anyone buy it. Goodness knows at this point. If you're talking about Elon Musk buying TikTok, I don't know anymore,
I just love the name. If you're in the business of scoops and you name your media company semi-accurate...
Can we say
Does that help?
One other thing.
It should be called fully accurate.
Or maybe correct news.
Not completely incorrect.
We heard this from someone, news.
I can barely hold my excitement, and we are so close to 6,000, guys, on the S&P 500.
We also have a nice red-hot, sticky headline on the terminal. Former President-elect Donald Trump has had a phone conversation with Xi Jinping, and he is saying they discussed TikTok. Now, that's the red headline. They also discussed trade and fentanyl. And yet TikTok is the one that we made red.
I would really like to know what order they discussed that in.
I mean, those two other things are so much more important than
what
TikTok.
Comes first, right? Because TikTok is around the corner.
Maybe they talked only a little bit about fentanyl. And just a bit about trade, but a lot about TikTok.
All we can do is wait for more reporting. But we've got to get back to these markets, of course. About 4 minutes into the session, let's keep the conversation going now with RBC Head of Derivatives Strategy, Wu Silberman, joining us at the desk. Amy, thank you for bearing with us.
No worries.
Let's talk about ducks, because when you see a duck on a pond, you don't really see much up top. It looks serene. You take a look under the water, the duck is paddling furiously to move itself along. You talk about how we're in a paddling duck market right now. Explain.
Well, we are, and certainly sometimes it doesn't feel like it, but look, it's just this idea that the dispersion in the market is really high. You don't necessarily see it in index level volatility, but underneath the surface, we are going to continue to see in 2025 these violent sector rotations. You got a preview of that when the cabinet picks came out for Trump. I only think that will continue as we start to get news, dribs and drabs across the board on cabinet picks, on tariffs, on geopolitics. And I think sometimes your headline VIX is just not capturing everything that everyone is feeling underneath.
We are just over 15 points, 16 points away from that 6,000 level again on the S&P 500, and I can't believe it's taken us weeks to get here. Again, after the exuberance we've seen, we were talking to an investor yesterday, Janice Henderson, who made the point that at these heights, there's more downside risk. Do you believe that?
Yeah, this is it's interesting. So sort of post-COVID, the options relationships that we've seen really broke down. And one thing we saw that was super weird was volatility would rise as the market rose. And the reason for that was because people really felt this FOMO. They had to jump into the pool. They couldn't, they couldn't miss out on these benchmark rises. And so call options would get bid as volatility rises. This is different, right? Because a lot more people are long. And so physically, I think we're going to see this year of volatility normalization, not for any special reason, just because as we continue to move up, more people have already participated. So I actually think that downside is going to move.
When you talk about, the duck paddling underwater and the rotations, I think of the RRG function on the Bloomberg terminal.
I love that function.
Okay, so it's awesome, right?
Yes.
If you type in SPX index or any index and put RRG, you're going to see a graph of the rotations. I have it set to weekly, and you can see it's like a matrix, right? So the rising stars are over there in the top right corner. You've got consumer discretionary, you've got telecom services, you've got information technology. What do you think about the breakdown of the industry groups? Which is the most interesting for you?
So I'll tell you two things. The first is, just from a dispersion, high-level point of view, it's really a good time to be a stock picker, and it really matters that you get those sector picks right. Because in these high dispersion environments, you're talking performance is really about where you put the money. It's not these like highly correlated environments where you can just be long. That's first. And then second, when we look down at the sector level for options, like where do you see the most bullish sentiment? It's still in those like tried and true Mag 7 names. You know, you actually haven't seen it shift over to the trades that people would necessarily characterize as breadth widening. You haven't seen option sentiment move there yet. And I don't know if it will, and we just need to catch up, or if that's telling you something about how this year is going to play out.
Well, I'm glad that you can both read RRG, because that looks like a bad trip to me. I feel like I have to be in a specific state of mind to read that one.
It's like a business matrix. You know, you've got your cash cows, you've got your shooting stars.
To me.
I need time to think about it.
Dogs.
But let's talk about earnings season up ahead. About 40 companies have reported in the S&P 500 right now. In the world that you live in, the options market, the derivatives market, what are you seeing in terms of hedging, of people placing bets when it comes to the upcoming earnings season?
Yeah, so first, I think this will be an important earnings season. And the reason I say that is when you just look at the pricing of magnitude of moves, it's a lot higher this quarter than it has been for, say, the average of the past 8 quarters. So meaning people just expect more single day earnings movement than they have before. The second thing I'd say is, you know, one trade idea that we've been talking about is just owning NASDAQ downside protection, because especially as you get later into earnings, you get that big Mag 7 reporting. You know, these tend to move the market from just a simple breadth perspective, and we haven't seen that exuberance tick up like we have in the past. It's just been very neutral, which is interesting to me, because in the past we've seen that exuberant spiral, that volatility up, spot up on these earnings events.
You know, speaking of earnings as well, when we've seen some outlooks, let's say from retailers this week, something that's been really sticking with me is how choppy it's been. And it's therefore interesting to me to see that RRG screen point to consumer discretionary as one of the leading sectors here. How fragile is that sector? Especially, yes, I get it. Retail sales came in higher but lower than expected. So there does seem to be a little bit of fragility there.
It's such an interesting question. We were actually just talking about Richemont earnings, you know, and those were a blowout. I'm a little guilty of helping their top line, but you know.
Congratulations.
One thing I'll say is a big topic that keeps coming up with our clients is we've had this K-shaped recovery. Our economist talks about this all the time, where the luxury consumer, when you look at the hard versus the soft data, is really the one pulling through. But will that happen in 2025? Because if they don't, that's not great for your Richemonts of the world. That's not great for your, you know, XRTs, XLYs when you look at that breakdown in constituency. And I think that's a big question right now. The option sentiment does not suggest it's bearish yet. If that starts to pick up, I would say that means maybe there's some concern about that luxury consumer.
Amy Wu, great to have you with us as always. Please come back soon. RBC's Amy Wu Silberman talking to us about the markets. Did you see the Walmart story yesterday?
About the used luxury handbags?
Yeah, it's not just the working bag now. They're doing kind of a real thing.
I am so impressed that you know that.
I think it's...
It was on the Bloomberg top news function, so I'm sure that's how he found it.
But we've had a hard time making him pay attention to Workin and Birkins before.
True.
That's not true. I'm a huge Birkin bag fan.
Yeah,
I'm a huge bag fan just in general.
Do you own a Birkin?
No, but I would buy one.
I aspirational buyer?
The craftsmanship, you know.
I'm going to send this
the
segment
leathers
to your
that
wife.
are used.
I hope you know that, so be careful what you say.
All right,
I have the Richemont website up, by the way, now.
Yeah, I believe it. I believe it. But they don't have the Kelly Bit jewelry that you like.
I do. I like to buy local.
All right. We are going to bring you a Bloomberg scoop when we come back about what could be one of the biggest deals of all time, certainly the biggest in the mining industry, if it actually happens. I think it's a pretty big if, but it's still interesting to think about Rio Tinto and Glencore getting together. We'll do that next. This is Bloomberg.
All right, it's time now for Top Calls. Some of the analyst action in focus this morning. And first up, Applied Materials getting upgraded to a buy at KeyBank Capital Markets. The analyst says that he sees AI-related devices as growth drivers, and KeyBank also upgrading Lam Research. Next up, we have Bank of America downgrading JetBlue with a sell rating. The firm says that the airline looks expensive and is also facing execution risk. Bank of America also cutting Southwest for the same reasons. And finally, we have Crocs no longer a buy, according to Williams Trading. The firm is downgrading the shoe company to a hold, saying that the outlook for its brands has dimmed since the December fashion footwear show in New York City. Matt, were you there?
I wasn't there, but what is with people, on the airplane wearing like pajamas and Crocs?
Okay.
Get dressed, for goodness sakes.
I just took a red eye from San Fran. I was in my pajamas, but I had Hoka's on, not Crocs. You're not seeing any part of my foot.
I think it's no better, Katie.
No better.
It's
well,
no better.
I felt great, so that's what matters.
Okay, your comfort is key.
Thank
now,
you.
Bloomberg has learned that Rio Tinto and Glencore were in talks about combining their businesses to create a $160 billion mining behemoth. But those negotiations are no longer active. Bloomberg's Joe Deaux covers all things industrial, so he found it interesting. I found it interesting. We can speculate about how cool it would be, but let's start out by saying chances of this happening right now are pretty low.
Yeah, who knows, right? I mean, I was talking to a couple of investors right after we broke the news yesterday, and they had the big question mark above their heads. It was like, okay, yeah, there's a lot of synergies here that make sense, but I think it was interesting. One of the things that these two investors in particular came to was the question of culture. And I don't think that's something to overlook, right? I mean, you have Glencore, which we've noted is this swashbuckling trader mentality.
Always in court.
And then Rio, who in particular, probably the past half decade have been quite conservative. I mean, they blew up an Aboriginal site in Australia. That was one of the biggest disasters we've seen in the mining industry in a long time. And they have changed their tune with Jakob as their new CEO. So I think there's a lot behind the scenes on that.
Right, the behind the scenes, if these discussions took place as recently as late last year, but not currently active, as y'all have reported here, then why were they talking about it? For these two giants to even come together and have the discussion, the rationale is almost more important right now on the changing winds of the industry.
Right. I mean, listen, my colleagues in London, Archie, Dinesh, and Tom had put in the story, listen, Rio's on a bit of a high here. They bought out the rest of a copper mine for about $3 billion. They purchased Arcadium, which is a lithium miner. That was like their biggest M&A deal in years. People had been wondering when the CEO would finally kind of splash in. So they could be riding a bit of a high of looking around the market, seeing what they can do to be more acquisitive. But mainly, one of the things that's going on in the mining space right now is how can you get your hands on high quality copper assets? And Glencore has them in a way that Rio Tinto currently does not.
We've talked about culture, we've talked about copper. Let's talk about coal, because Glencore has a massive coal business. We know that Rio probably isn't too interested in the coal business. Is there any possibility it could get spun out? I feel like we've had this conversation before.
Right. I mean, Glencore had considered spinning out the coal business after buying it off of Teck, and then, of course, their investors said, no, keep it, because there's so much money to be made in coal right now.
Is this dirty coal or clean coal?
Thermal, excuse me. We're talking, the met coal is especially attractive. Whatever.
It's not lab-grown coal.
No lab-grown. But, yeah, listen, this is the major issue between both companies. It is the question of, does Rio suddenly want to have coal assets, something it got out of? And does Glencore actually want to be getting into the iron ore business, which is something it doesn't do? And I think that's a tie-up of question. Where do the investors actually feel about this? Where does the company feel about this? I mean, listen, the synergies are obvious. Oh, you can combine all the base metal assets. You have copper. You're talking about the energy transition. That looks awesome. And then you have the iron ore and the coal and the bulks, right? And those are just staples across the globe and something that is always going to be making money for a long time. But again, listen, the talks are currently not active. It's very interesting. I'm sure in the mining space, we're going to be hearing investors talk about this for a while because hey, it is interesting, right?
Yeah.
And it would be huge if it happens. Bloomberg's Joe Deaux, thank you for joining us, telling us exactly what's going on underneath the surface here. Now, coming up, we're going to go back to that story about Goldman giving its two top executives generous retention awards. Like I've been saying, it's payday. We're going to talk about that next in Wall Street Beat. This is Bloomberg.
All right, welcome back to Bloomberg's Open Interest. Taking a look at the stock market right now, we're 21 minutes into the Friday trading day, and we have a rally on our hands. The S&P 500 up by about 0.9%. It's big tech that's in the spotlight right now, leading this market higher. The Nasdaq 100 up by about 1.3%. We had been a bit higher at the opening bell, so of course we'll see if these gains fade. But for at least right now, a big broad rally that's also extending to your small caps, with the Russell 2000 currently higher by about 0.9%.
And it's time now for the Wall Street Beat. Goldman handing out an $80 million retention package to its two top executives. Bloomberg's chief Wall Street correspondent Sridhar Natarajan joins us. Is this the John Waldron appreciation package? I mean, if you look at this package, you expected David to stay around. Your packages really go out to vest through the next 5 years. They start vesting after that point. John was somebody who maybe, I guess, a year ago now we were talking about as someone who could potentially become the CEO of Carlyle. Then Harvey Schwartz took over. So he signaled as an executive that could go somewhere else. Is this a bid to keep them on board?
Well, 2 points. A, Sonali, that's plagiarism. The John Waldron retention package was a term that I pointed out to you because it was pointed out to me by other Goldman partners because this has been in the water for the last 2 months. And let's talk about why we're even affectionately dubbing it that way. When was the last time a CEO of Goldman Sachs left that role to go run a private equity firm or go run some other investment firm? Usually they go into Washington, D.C., become Treasury Secretary. Yes, that door has been closed for senior Goldman leaders for a while. But David Solomon was doing well. He had a pep in his step. The firm has been doing really well, and it didn't look like he was going anywhere anytime soon. However, there were tons of questions about John Waldron. He has been by David Solomon's side for about 30 years now. For the last 6 years, he's been the number 2 at the firm. And in the last several months, there has been so much conversation inside Goldman Sachs as to what will happen to John Waldron. Will he stick it out now for another few years because David Solomon does not want to go anywhere else? Well, the answer is the board is saying, here's a very pretty retention package to make sure that he sticks around at least until 2030. And the fascinating part about this retention package, they don't have to do anything. The stock doesn't have to double. The stock doesn't have to triple. They don't have to meet any earnings target. The only target that has to be met here is John Waldron and David Solomon have to be in that seat until 2030.
That's wild.
This is a little inside baseball here at Bloomberg. Sometimes there's a little strife. Bloomberg News, print versus television. You were just promoted to chief Wall Street correspondent on the print side. Wasn't that always your title here in TV?
On TV,
yeah.
Right. Two things can exist.
Right.
We're co-presidents.
We walk in pair. We're completely fine, Matt. Don't try and add strife here.
Pull up my comp screen.
Will
Goldman
Shaker.
Sachs. Will Shaker,
Yes.
our producer in the control room. Goldman Sachs versus the rest of Wall Street. I love to use the comp function. It defaults to a 5-year time period, which I think is a great default. Goldman Sachs is outperforming every other bank on Wall Street. Don't they deserve this money?
100% they're outperforming every single Wall Street bank. In fact, if you go back a couple of years when they actually made the decision, after a lot of furor internally, where a lot of senior partners actually pushed the CEO to abandon that ill-fated foray into consumer banking, get rid of most of that, they've actually refocused into what they do really well, money management and investment banking. It's been a good period for that, and Goldman Sachs has truly outperformed.
Really important here on money management. They're also getting pay tied to carry. The reason I think this is fascinating is a lot of the big private equity firms have moved away, actually, from carry to pay in stock. So why is Goldman then paying in carry?
Again, this is fascinating because you have to go back to the early days of the Solomon Waldron leadership back in 2018. In fact, through the first 2 years, so much of the conversation was about how that leadership at that time looked at how they were paid relative to how some of these private equity firm executives were paid, and actually felt that they were underpaid. They had explored so many things. They had explored getting a bigger cut of the carry back then. They had already added a part of the carry to the partnership pool. They wanted a bigger cut of the promote from the SPACs when SPACs were a thing. So this has been on top of mind for a while. They've made some additions. This turbocharges it further just to make sure that Goldman Sachs can go out there and say you don't necessarily have to leave for a private equity firm to be paid like a private equity titan.
All right, Sri, congratulations on the new title. It's great to see you. That is Bloomberg's Sridhar Natarajan. Now, coming up in the next hour, we'll speak to Gabriela Santos of JPMorgan Asset Management about her investing strategy under Trump. We'll also speak to Marc Rosen of Catalyst Brands, formerly of JCPenney, now of Catalyst Brands. We'll discuss. This is Bloomberg.
We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld.
Coming up, stocks getting a tech boost. The S&P 500 is poised for its biggest weekly advance since election week.
And the clock is ticking for TikTok. The Supreme Court is set to rule on the app's shutdown or sale as incoming President Trump pledges an extension.
And a $9 billion retail behemoth. We'll speak with Marc Rosen. He is the CEO of Catalyst Brands, which now owns Brooks Brothers, Eddie Bauer, and other American brands. All that and more coming up. But let's get a check on these markets on this Friday. A big rally on our hands. The S&P 500 up about 0.9%. The NASDAQ 100 higher as well. And speaking of tech, we do have some news right now. The Supreme Court upholds the law that threatens U.S. TikTok shutdown. Of course, we have been waiting for this. And let me just reiterate that the Supreme Court upholds the law that threatens the U.S. TikTok shutdown. Of course, that ban set to go into effect on Sunday. Let's break it down now with Bloomberg legal reporter Ben Bain, who joins us from Washington. Ben, so the headline just crossed here. What do we know so far?
Yeah, so this decision isn't entirely surprising. When they had oral arguments over this about a week ago, it seemed like the justices were very receptive to the idea that this law was constitutional. Stepping back here, last year, bipartisan Congress supported this law. President Biden signed it into effect. And basically, Sunday, what this requires is that if there's not a sale of TikTok by the Chinese parent company, it's effectively banned in the United States. Now, there's a lot of nuance in that. Incoming President Trump has said he wants to keep TikTok alive. He's also said in a filing to the Supreme Court before this decision that he wants to be able to cut a deal. He essentially wants to be the person who's going to be able to figure out any kind of potential sale here, which this law would require. And now that Trump will be coming into office on Monday, it's effectively going to come to his desk. So as the chief executive of the United States, he and his Justice Department will ultimately be responsible for enforcing this law. So there is leeway here in terms of what happens. Now, on the other side, there's also what TikTok and ByteDance, the Chinese parent company, is ultimately going to do here. The company has said they're not really interested in this sale. So there's a chance that the company may just decide not to stick around here in the United States. But there are a lot of moving pieces here. We've also seen some reporting that there's some discussion about potential buyers, and the Chinese government has been considering certain options here as well, including Elon Musk. This was reported by Bloomberg just a few days ago. So there's a lot of question marks here. It's not entirely surprising the Supreme Court issued this opinion, which effectively pitted national security concerns. The United States Congress said TikTok poses a national security concern because Americans' data could be effectively hoovered up by the Chinese government, or propaganda could be spread vis-a-vis TikTok, versus free speech concerns, which was the other side. The company has effectively said those national security concerns are non-existent. It's effectively an American company. TikTok is, that's headquartered in California, even if the parent company is ultimately in China. Plus, you had numerous content creators that rely on TikTok. Approximately 170 million Americans, use TikTok for their businesses, for other things, saying this is our right to have free speech and should be banned. The Supreme Court today went with that national security argument. They said Congress had the right to pass this law. It wasn't unconstitutional. And here we are 4 days before Donald Trump will take office, and it's going to come effectively to him in terms of how to enforce it.
All right, hang on a second, Ben. I want to get over to Caroline Hyde. She anchors the Bloomberg Technology Show. And Caroline, we may have expected more movement in Meta shares or Snap shares because this effectively sidelines, at least to some extent, a competitor, right? But as Ben points out, this isn't really a surprise, and that could have been priced in. You can see Snap shares are now down. They had been up. Meta shares were up 2% before the news came out, and they're only up 1% now. So is this going to change the landscape at all?
Depends what lawmakers do as well. currently we just had headlines prior to that announcement coming from the Supreme Court from Chuck Schumer, minority leader in the Senate, who's saying we should keep working to find an American buyer for TikTok. The absolute about face of lawmakers in the United States about whether or not to sustain TikTok and the ability to use it come the 19th is quite remarkable here. And I do feel that suddenly the threat that it's going to go dark, whether it's because it's of ByteDance and TikTok's choosing, or indeed just ultimately Oracle can't support it, so therefore you're not going to be able to access the app like happened in India back in 2020. All of this suddenly putting into sharp relief as to whether the lawmakers should take a stand. Look, the New York Times were reporting that Chuck Schumer has been in touch with Biden, no less, to say this is about your legacy. We need to keep this open to Americans, 170 million of them on Sunday, or you're going to get a sudden wave of anger. But of course, this does pass the buck to the next administration, who the day later do indeed take over. And then Shou Chew, who is at the inauguration, we understand, the CEO of TikTok. What then happens between that relationship? Look, prior to this headline as well, we know that Xi Jinping, the president of China, was talking about the future of TikTok with President-elect Trump. So this is now in lawmakers' hands. Will we get some sort of delay? And equally, the last remaining idea is that indeed ByteDance does decide that it would look at some of these options on the table for selling TikTok, and that would also put in place a 270-day delay. So it does seem to be priced into Snap, actually on the downside, Meta not moving, as we still seem to be waiting with bated breath as to whether lawmakers or indeed ByteDance itself does something to postpone.
Okay, so now that we have the Supreme Court upholding the law in a unanimous vote, Ben, I want to talk about procedure a little bit moving forward. As you had mentioned, there's kind of a lot of conflicting forces here. Bloomberg Intelligence's thesis here is that an executive order can't alter the law, but Trump can probably save TikTok only if ByteDance completes a divestiture under the law or if Congress changes it. So if you think about from here, the next critical moments for TikTok and the 170 million people who use it, what are they?
Well, I mean, I think it's one thing is how it's not just TikTok involved here, but it's also all of the companies involved in allowing TikTok to be accessed by 170 million people. Effectively, you have a law right now on the books, and as Kelly mentioned, completely, I agree 100% that Congress may step in, and this is really ultimately, going to be kind of down to the wire here, and there's lots of moving parts. But as it stands at this very moment, there are apps out there, there are platforms out there where this app exists that are also going to have to decide how are they going to treat this in the interim. So the next kind of step, I would say, from a legal perspective is we're going to need to see how these companies that actually make TikTok available are going to respond. And I think, they may try to also seek some clarity here because, this is a very broad law. This is a law that, effectively says that this app is a national security threat. And how that's interpreted by all of the companies involved here is going to really play out over the next couple of days. And we don't know what's going to happen, as Caroline mentions, with Congress in the next couple of days. Right. So there's a lot of question marks as this is all playing out. And companies, as we know, don't like to put things like that to chance, right? They don't want to be on the wrong side of something like this. So we're going to have to see how they respond.
Let's talk about the national security piece, because, of course, I've said before on this program, national security, that's a broad church. The government's argument, as you lay out, is that this app creates a national security risk. What proof did they offer for that?
They didn't. So there wasn't in the actual Supreme Court case or in the law itself specific examples laid out. I would say, though, that there were numerous friend of the court briefs from prominent politicians who did vote on this law or would be enforcing this law at a state level. So, states, attorney generals, and others in support of this. So, the fact is, there was not this moment where they said, "Look, we have found a smoking gun that data from Americans is being hoovered up and sent over to the Chinese government." It was a little bit of, this is a national security concern. We are telling you as Congress and as the executive that this is a national security concern. And, you need to basically listen to us, and we're passing a law. in a bipartisan fashion. As Caroline mentioned, it's a major about face what we're seeing right now in many respects.
Keep in mind, it's not just that they can access the data of 170 million Americans to potentially blackmail them or otherwise embarrass them. They could also tweak the algorithm to send misinformation. They could stir up unrest in this country, and they could easily put malware into software updates and infiltrate systems. Caroline, I want to ask about, when we talk about 170 million Americans using TikTok, I kind of wince because we imply that it's productive, and most people obviously are wasting their lives away and getting dumber by the minute.
Hey, speak for yourself.
But Will Shaker pointed out an Oxford economic study that says TikTok has generated a $24 billion addition to U.S. GDP, and that was from 2023. More people obviously using it last year and then would be this year. Why can't other social media networks, why can't Instagram, for example, have the same economic impact as a TikTok?
It does. And I think it's just that it's been net additive in terms of commerce for small to medium-sized enterprises. But every time you have the leaders of Meta on, they'll say, remember what we do for small and medium-sized enterprises to be able to sell, to be able to garner your attention and sell their products. TikTok, of course, has really been leaning into the e-commerce side of the equation and the direct-to-sales, so maybe that's helping boost. Also, there's a little bit of money being made by influencers. Remember, they're going to be able to be being paid by advertisers, marketeers. All of this, though, has been a net contribution. Remember, we're also seeing about $12 billion of advertisers spending going to TikTok, though. Does that go abroad to Singapore, where the real technical headquarters is of TikTok, as though they would also say it's here in LA as well? But this is a contributor to GDP. But does that matter in the case of national security? This has happened before in 2020 when India just overnight decided to take off not just TikTok, but other Chinese-related social media apps. And maybe that money can flow elsewhere. Look, already the people are flowing elsewhere, Matt. People wanting to go and waste their time, as you say, on Red Note, Shanghai Show, as it's known. This is another Chinese-owned social media company, but not owned by TikTok or parent company ByteDance, as Lemonade is. And then the new act of Congress would have to come in to prevent Americans from using that. This is a game of whack-a-mole, but I do think in general GDP will just, or advertising spend will flow to a Meta, to a Snap, to a Reddit, to a US-based company.
All right, Ben, Caroline, thanks so much for joining us. We're going to continue to talk about this. So if you haven't gotten your TikTok fill, we're going to bring you more throughout the hour on this business story. But we want to get back to markets. When we come back, Gabriela Santos joins us, JPMorgan Asset Management Chief Market Strategist for the Americas. She says she wouldn't be surprised to see a 10% correction in the first 100 days of Donald Trump's presidency. We'll ask her why. This is Bloomberg.
I want to bring you back to that breaking news. Just moments ago, the Supreme Court upheld a law that threatens to shut down TikTok. This, of course, was a unanimous move by the Supreme Court on Friday that unanimously moved to require ByteDance to sell or face a ban of the video sharing app by January 19th. Of course, that is Sunday. We will bring you more about the move and the future of TikToks as we get it.
All right, a limited reaction so far. If you take a look at shares of other social media companies, think Snap, Meta, Pinterest. Of course, you take a look at these broader markets, though, and we have quite the movement underway, and that's to the upside. You take a look at the S&P 500, currently higher. Well, we're taking a look at Meta right now, up about 0.4%. But you broaden out. You take a look at the S&P 500, up about 1% right now. You still have big tech in the lead, despite, of course, what's going on over at the Supreme Court right now. The NASDAQ 100 higher by about 1.5%. It certainly helps that you have NVIDIA shares up by about 2.8% right now. And a little bit of a rally underway in the bond market right now. The 10-year yield down. You can round that to about 2 basis points. We were a little bit lower earlier this morning, Matt, but still the 10-year Treasury yield below 460.
All right, very interesting stuff. We continue to rally in the markets. Let's talk with Gabriela Santos right now. She is JPMorgan Asset Management Chief Market Strategist for the Americas. And we do want to get to markets, but you have this TikTok story. I find it fascinating that Donald Trump held a call with President Xi about fentanyl, which kills millions of Americans, trade, we do $600 billion a year of that with China, and TikTok, and yet we're focused on the latter rather than the formers. But is it that important?
So I do think what's going to be very interesting is how the broad relationship with China evolves from here. And it's truly become a bipartisan issue in almost the last 10 years, this broad economic competition with China under the guise or broad umbrella of national security. And if we think about the first Trump administration, there was a lot of tariff noise, but there was tariff signal, and that was specifically with regards to China, where tariffs on Chinese imports went up from 3% to 11% and have stayed there under the Biden administration. So that's what we're going to be watching Inauguration Day, post-inauguration, is how exactly this relationship evolves. China, for its part, is trying to be proactive, trying to engage President Trump and the Trump administration, tamp down on anti-U.S. rhetoric domestically. So it's trying to do a bit of a charm offensive, but let's see. Last time around, that didn't quite work.
This gets to a bigger question of how do you price in geopolitical risk? I mean, you take a look at oil markets, and it seems like you can't hold a real sustainable bid there. It's still a supply-demand driven market. And you take a look at some of these risk assets. We have a lot of big U.S. companies that are very exposed to China. Is that an investable theme when you think about all these tariff proposals being thrown around?
So I think the change in the U.S.-China relationship has been hugely consequential for markets. In terms of Chinese assets, these have been priced in the multiple. There was usually a 25% discount, Chinese equities, U.S. equities. That's now at nearly 60% discount. So a new multiple on China to incorporate a higher geopolitical risk premium and domestic uncertainty, of course. China has its own role here. It's also been hugely consequential in terms of multinational companies diversifying supply chains with other beneficiaries like India, Southeast Asia, Mexico, and slowly diversifying their consumer base as well. So it's been hugely consequential. And I think ultimately investing in China has become much more tactical now, depending on when there's enough of a discount to compensate for these uncertainties. And the flows have been migrating to other parts in emerging markets, big winners like India and Taiwan.
You know what's fascinating to me is that we are now finally 6 points away from S&P 6,000 again. When we hit that mark last year, it was an exciting moment for everybody. We took a fall off, and it took a while to get back there. But part of the reason we've been there in the first place was this whole U.S. versus the rest of the world idea. You had that IMF data this morning showing even more growth for the U.S. We have Inauguration Day on Monday. You have a President Xi call with President-elect Trump. When you think about the risks over the next 6 months, over the first 100 days, what is it that is going to keep the S&P from taking off in the middle of all this uncertainty?
So I think, Sonali, going into this year, the U.S. economy continues to be not just resilient, but doing very well. Magnificent earnings from the large tech companies, broadening earnings for other sectors, starting off with banks earlier this week. I think the trick is just the starting point. Valuations, positioning in mega cap tech, concentration in a handful of companies, and going into Inauguration Day, the first 24 hours, the first 100 days. So this policy fog we're going into, of course, eventually the market will digest it, the scale, the scope, the sequencing of policy, including tariffs, immigration, regulation, the fiscal, but we might have a little bit of an indigestion in between. And we've already been seeing that in bond markets with the 10-year yield up 100 basis points and the dollar stronger by 8%. So maybe that starts to feed through a little bit more on the equity side as well.
You mentioned Taiwan and India. If you made a ton of money in U.S. markets where you think valuations are a little bit frothy, would you put it to work in emerging markets?
We would put it to work in select countries. I think EM broadly, in terms of buying the EM index, the beta, not yet, because really EM is driven by the dollar, 10-year yields, and the growth differential. And it might take a little bit more pain for eventually those variables to turn more positive. And that's been the case since mid-23, and EM has underperformed, and we've seen outflows. But that doesn't mean you can't have good performance elsewhere within emerging markets. So Taiwan last year, for example, was up nearly 40%. That's an AI play. So the second, third derivative of AI adoption. India, very much an idiosyncratic story, now the second largest market within emerging market equities, and that's one that we think is a great diversifier for China. And then lastly, the third, with not in emerging markets, but equally interesting, is Japan, given corporate governance changes. And both Japan and India have corrected recently, and should they correct further, we would be interested in investing even more.
Well, let's talk about of course, the central bank landscape layered on top of that, because you think about Japan, you have the Bank of Japan going in the opposite direction. You think about the Fed, a lot of question marks over what they will actually deliver in 2025. It seems like markets are coalescing around one rate cut so far this year. Does that seem realistic to you?
So I think for Japan, it's hugely consequential that interest rates are no longer negative. Huge. And that's really a reflection of nominal growth improving in Japan for the first time in 30 years. And so we've seen a huge rally in Japanese banks, makes sense, as a result. But in the short term, it is the interest rate differential with the US that's important, and that's been reflected in the Japanese yen, which has been depreciating quite significantly.
156.
Yikes.
Quite
right
significantly. Yeah. So I think for a lot of our investors doing strategic research and planning to invest in Japan, it would be hugely helpful if we have more stability in the Japanese yen, even some appreciation as interest rate differentials between the US and Japan settle. Then I think you would see even more inflows into Japan.
When we think about the next few months, you had mentioned the uncertainties. What is kind of the optimal policy for you in your perspective? Let's bring it back just to the US and China, because that's kind of where this trade rhetoric really started. What would you need to see to be comfortable with a certain degree of maybe tariffs here, but also, it sounds like, a comfortable path forward between the two countries?
So I think it's about uncertainty, right? It seems like a tagline, but it's true. The markets hate uncertainty. And in 2018, when we had the first trade war 1.0, there was a lot of tariff noise. It took us a while to understand the signal. And that was a year that was negative for equity markets, especially emerging markets, down 14%. We did see substantial dollar strength of about 10%. And then in 2019, we understood the signal, and more broadly, markets recovered, with the exception of China, where there was a lot more to understand there. So it's not necessarily that we need A, B, C to happen in policy. I think we just need to get through the policy fog, incorporate that in multiples and currencies, and then we'll be able to adapt. So it's much more of a short-term fog that eventually clears, and then the long-term horizon there becomes a lot more interesting.
The fog will clear. There's light potentially at the end of the tunnel. Gabriela, it's always great to see you. Appreciate you rolling with the breaking news today. That is Gabriela Santos of JPMorgan Asset Management. And let's get back to that breaking news. That is that the Supreme Court has decided to uphold the law that threatens that U.S. TikTok shutdown. Of course, now this requires ByteDance to either sell TikTok by January 19th, this Sunday, or face a ban in the U.S. We've been talking a lot about the ramifications for other social media companies, but you take a look at Meta shares right now, of course, actually turning lower. They had popped a little bit on the news, then taken back those gains, and now down about 0.8%.
Yeah, I think it's fascinating. I would have expected, in fact, last night I was talking to Karen Buchanan, the executive producer, in the afternoon.
Just name dropping every producer you can.
Well, I said, listen, if we're going to get this announcement tomorrow, because the Supreme Court effectively warned us last night,
which was unusual.
Interesting and weird. We should look for reaction in Meta. We should look for reaction in Google. We should look for reaction in Snap.
Something
and then you didn't see it.
Does this actually provide more attention to TikTok itself, such that if and when it comes back stronger than ever?
No publicity is bad publicity, Sonali.
Exactly.
All right, we'll be back with more on these markets. This is Bloomberg.
want to bring you back to that breaking news. If you have been watching, you will have seen that the Supreme Court has upheld a law with a unanimous vote in an unsigned opinion that they believe Congress acted constitutionally when it required ByteDance to sell its TikTok app by January 19th or face a ban. This comes down to national security concerns for the Supreme Court. We will look at a very uncertain chapter ahead, but of course, the January deadline for the 19th is Sunday. So we're going to get some insights now from Rohit Kulkarni. He's senior research analyst at Roth, covering the internet and capital markets. You think about that uncertain path. You think about how there wasn't really a desire here to sell TikTok. You see the president-elect really inaugurated just on Monday, and this idea here that he doesn't necessarily want this anymore either. How do you think about that uncertain road from where you're sitting?
Hey, thanks for having me. It's a uncertain but a truly historic event, as in an app that is used by more than 170 million people that spend billions of hours on a monthly basis. It's a significant historic moment, and that's going to create ripple effects not only in advertising, social media sector, but around geopolitical landscape, around how this event could be used as a negotiating chip across US and China relationships going forward. I think looking at only the large players like Google and Facebook, I think those are the two that stand to gain the most in the near term, directly from eyeballs moving over and dollars moving over. The rest could start to see some trickle-down effects with companies like Pinterest, Snapchat, and Reddit starting to see a little bit of extra eyeballs, and that's a positive for you to operate a social media network. But uncertainty is here. I don't believe that there is a change that is imminent from TikTok being removed from the App Store on Sunday. Both Apple and Google will likely do that, to a scenario that TikTok remains usable and downloadable a month from now. I think we are going to be in this offline behavior for some time, and then we will see what Trump can do with this negotiating chip now that he has.
I wonder, we've seen data that points to other Chinese social media apps getting the most downloads on, for example, the Apple App Store. So kids are switching from one ByteDance app to another instead of going to Instagram, instead of going to YouTube. And I've heard that that's because it's just not as easy to monetize your content, to sell stuff on these American-owned social media apps than it is with ByteDance. Is that the case, Rohit? And why has ByteDance done a better job of helping content creators make money than, for example, Meta?
I think that the golden goose that ByteDance and TikTok have right now is they have cracked the code of social commerce. We have seen so many stabs at both Instagram, Facebook, Google has done it, even Amazon has tried it, many other apps have tried it, where how can you facilitate impulse buying on a social platform that you're spending hours at end? And I think the only company that cracked that code was TikTok. And that's how some of the creators who are very successful in TikTok have been kind of seasoned to be able to do create content that directly translates into actual e-commerce. So that whether Facebook and whether Google can crack that code, that remains to be seen. But right now, they have these long list of successful creators to come in and show them a la carte as to what could be possible. So that's where I think, like, whether they can crack social commerce code like what TikTok did, will bring in more creators, will bring in more users, and then the virtuous cycle will begin.
All right, Rohit, we got to leave it there. Really appreciate you hopping on with your instant analysis there. That is Rohit Kulkarni of Roth. And be sure to tune into Bloomberg Technology in the next hour for a full special on the future of TikTok. Of course, we'll be doing more on this program as well. But let's switch gears just for now, because America just got a new apparel powerhouse. JCPenney is combining with Spark Group to form a new retail giant called Catalyst Brands. The merger brings brands including Brooks Brothers, Eddie Bauer, and Lucky Brand under the same umbrella. And this $9 billion behemoth is launching with more than 1,800 store locations. Marc Rosen. He's formerly the CEO of JCPenney, will now serve as CEO of Catalyst Brands. I'm pleased to say he joins us now. So, Marc, first of all, congratulations. And when we've spoken in the past in your role at JCPenney, you've talked about wanting to revive the brand, bring back some of this brand relevance. How far does putting a Brooks Brothers, for example, in a JCPenney go to achieving that goal?
Yeah, good morning, and thank you for having me. We're really excited about this combination. And I think as we look forward, you talked about all the brands. I think the brands are really the power of the combination and bringing all those brands together. Those brands have also served over 60 million customers in the last 3 years. So we think the power really comes from the brand. It comes from the customer base. And then you talked about distribution. And we're looking right now at what that reach gives us. And if you think about the reach of all of these brands across e-commerce, across outlet stores, across specialty, and across department stores, there's incredible consumer reach there. As we look at the brands, we're also going to be very careful to respect the customer and respect the brand and make sure those brands show up in the right location for our customer.
I wanted to ask specifically about Brooks Brothers. My grandfather got his dress blues there in the Second World War. My brother and I went to store number 1 to get our first suits. It was really a company that made clothes in America and served, I think, a higher level of client. And then, of course, like everybody else, started making clothes in Asia and started popping up outlet stores at, Tanger outlets. Nothing against them, but it really didn't serve the brand well. Now store number 1 has been sold off, and of course it's been going through bankruptcy after bankruptcy. Can you bring it back to the level that it once was, or are you still aiming for the kind of late 20th century, early 2000s sort of middle market?
No, we absolutely believe Brooks Brothers has a place serving that customer who's looking for clothing that they're going to wear to work, but also customers are mixing that casual and that work product together. Brooks Brothers has amazing quality product, and I think that's one of the things that's powerful about this combination is our ability to take the Brooks Brothers brand and respect the premium consumer that that product serves and that brand serves, and to make sure that that comes across with that premium aesthetic, at the same time to take advantage of the things that happen behind the scenes, because there are sourcing synergies. The goods are made in the same factories and they start from the same raw materials, but that Brooks Brothers product comes out with a much more premium feel and aesthetic because of the way that it's made, which is premium.
What about some of these other brands? It's really interesting to see not just you, but a lot of your partners come into brands that were really emerging now out of bankruptcy. You think about Authentic Brands and Forever 21, and what you have done with JCPenney. My understanding here, because of your most recent release here, is that you're looking at strategic options for the operations of Forever 21. How much more deal making is there for you to start to get max value out of the brands that are now encompassing this new company and really set the company up to maybe go public again?
Yeah, so we're focused on capturing the value of the brands that we have right now. Like you said, we really have 6 powerhouse brands under one roof now. We have over $9 billion in sales, over 1,800 store locations across the country. And so there's incredible power in that combination. The other thing I think that we're feeling really good about is there's strength in a lot of the brands that we see. I know that we've talked together about the strength of JCPenney, and we saw that throughout the holidays as our Thursday Night Football brought 4 million new customers into JCPenney. Lucky brand has also gone through a significant revival, and they're seeing a very strong wholesale business and strong consumer response to the product. Aeropostale has just launched a new app and is seeing incredible growth in their digital sales. And so Brooks Brothers, which we talked about earlier, is also seeing strong positive comps. So we think the strength of those brands, together with the leverage in sourcing and supply chain and store operations of that brand combination, is really powerful to deliver the results that we need to deliver. And then this does become a platform for other brands as we go forward.
Let's talk a little bit about the physical footprint. I was talking this over with Mary Ross Gilbert. She's one of our Bloomberg intelligence analysts, and she made the point that this combination of brands may have upside, but you take a look at the stores. Also, some of the malls that they occupy probably need some CapEx here. What are your plans on that front?
Right, like you said, we have over 1,800 store locations across a diverse set of malls, and we're looking at really the power of having multiple brands within those mall locations and how we use that to drive traffic and to drive sales across those locations. So we feel good about the portfolio that we have in place right now, and you will see us continue to look at that customer experience and really focus on reinventing, making sure that that customer has a great shopping experience when they're shopping with us.
Well, Marc, congratulations. It's great to get some time with you. That is Marc Rosen, formerly the CEO of JCPenney, now the CEO of Catalyst Brands. Let's recap TikTok a little bit here because, of course, we got that news at the top of the hour that the Supreme Court has upheld the law that threatens the U.S. TikTok shutdown. Of course, now what happens is that ByteDance has to sell TikTok by January 19th or face a ban in the U.S. And any sale of TikTok, remember, would require approval from President-elect Donald Trump, who takes office on January 20th. So we'll see how this all shakes out. More coverage of that coming up next. This is Bloomberg.
Let's get back to the news of the day. The Supreme Court upholding the TikTok ban, and it was unanimous, so they really mean it. Let's bring in Max Chafkin, who covers all things technology, and Elon Musk, whose name was floated as a potential buyer of the social media company. You are a part of the All Things Elon Musk podcast.
Elon Inc.
Elon Inc. What is your reaction, first off, to, I mean, it's a unanimous decision by the Supreme Court. That is unusual recently, right?
I mean, there wasn't a lot of, I don't think there was a ton of wiggle room, and we saw that in the oral arguments. It kind of looked like it was going to go this way. You know, Congress made a law. There was a huge, there was by a large majority, there was a case made for it, which I think the Supreme Court pointed out that, that Congress saw this as a security threat. So there wasn't, I don't know that there was much to talk about. The fact that a lot of Americans really like TikTok has been, a big point in the news coverage and how people feel about it, but I don't think that really factored in how the court saw
on this desk.
It's mine. Can we talk about the Elon of it all? Is Elon Musk really going to buy another social media app that I love and kind of mess it up?
Well, Elon has not commented on this. I don't think we really know how he feels. He is always open to a new project. We know that. And he seems to really enjoy owning one social media app. So I think in that sense, maybe. TikTok also very valuable. It's growing quickly. It's I'd say a legitimate threat to Facebook. And Elon Musk has talked about admiring TikTok, liking the way it works, wishing X were a little more like TikTok. So I think all those things work in his favor. The other thing is you need to find, to sort of keep TikTok in the U.S. without an act of Congress, you need to find an American buyer who is going to be acceptable to the Chinese government, acceptable to the Trump administration, and who has, $40 to $50 billion. So that universe is pretty small, and Elon Musk, I'd say, is one of the only people.
Is he in it?
Maybe the only.
Is the Chinese Communist Party thinks this highly of Elon Musk? Is he that close to the communists in China?
I don't think there are that many American business people. Maybe he is the only one who has a relationship this close with the Chinese government. When you look at how Elon Musk succeeded in opening a car factory, in getting the Chinese government to change a bunch of their regulations around foreign ownership of car companies, to blaze through a bunch of COVID restrictions and get that gigafactory open in Shanghai, you got to say he's got a close relationship. Also, while many other American executives have been kind of cold on China, Elon Musk has been openly pretty warm, even recently. So I think there are a whole bunch of reasons to think, like he does have a good relationship there.
But it's not just Elon Musk, isn't it? It's other venture capital firms, major investors. This is Jeff Yass at Susquehanna that has something at stake here. Sequoia Capital, who has been very adept here in figuring out how to navigate that U.S.
You're talking about
China.
those who own ByteDance right now.
Correct. And so they would want a solid outcome here too. And by the way, they've been navigating this U.S.-China tension around this for years.
Yeah, and again, so the buyer's going to have to be approved by Beijing, and like the thing that is difficult here is that TikTok, ByteDance, they've said they're going to shut down, right? There is a possibility that ByteDance, it's a very valuable company, it has users around the world, that ByteDance does exactly what Facebook and Google did in China when they were faced with political opposition, and say, you know what, you don't want it, fine, we'll take it, and that could happen as well. It could still happen, even though the Biden administration is currently saying, you know, they're not going to take any action on the 19th when this ban expires, when this ban goes into effect. Trump's people are saying they're not looking to ban TikTok, obviously, but in the end, like China, ByteDance, they could still decide that they would prefer not to comply with this rule and just shut it off.
All right, Max, really looking forward to the next episode of Elon Inc. That, of course, is Bloomberg's Max Chafkin. And coming up, more on that TikTok ban and what it means for U.S.-China relations with Lindsay Gorman of GMF's technology program. This is Bloomberg.
We've been talking about how the Supreme Court has now upheld a law that threatens to shut down TikTok, opening an uncertain chapter for the social app and its users. That's 170 million people using it in the U.S. Joining us now, Managing Director and Senior Fellow of GMF's technology program, Lindsay Gorman. Lindsay previously served in the Biden White House as Senior Advisor on emerging technology, national security, and democracy issues. And national security is really the ground that this is being fought on. What does this mean moving forward? Because CFIUS initially essentially handed this decision over to the Biden White House. It was pretty inconclusive. Does this mean that the power will be in greater hands of the president moving forward, especially when the next president believes differently than the one that is outgoing?
Well, it's honestly hard to keep straight who believes what on TikTok these days. This is probably the end zone of what's been a 5-year saga, starting, as you mentioned, with that CFIUS case. But even then, it was actually the Trump administration originally that issued an executive order to ban TikTok as well as Chinese app WeChat. So this goes back a long while. And ultimately, in fact, the power has rested in Congress to pass a law to force this sale of TikTok from ByteDance. Now we're entering into somewhat uncharted territory because President Biden has said he's not going to enforce the law when it comes into effect January 19th, just a day before he steps out of office. And incoming President Trump, who previously did take a hardline stance on TikTok and its national security threats because of its Chinese parent ownership, has now said he wants to save TikTok. He wants to work out a deal. So I think we haven't seen the end of this saga. We'll likely see potential buyers come out of the woodwork. We've already heard about potentially Elon Musk and others. And so I think TikTok's future remains uncertain.
Well, to that point, Lindsay, we have a headline crossing from Reuters right now saying that the White House says that TikTok action falls into the Trump administration. Like you said, Joe Biden has said he won't enforce this law on the 19th. So we'll see how that shakes out. Let's talk about potential buyers here and the potential price tag. I mean, how much could TikTok cost? I would imagine that would limit the pool of potentials here.
Yeah, this is one of the most successful social media platforms. There would be very few buyers, but I think we'd be looking, in addition to individual buyers, at consortia of investors who have, over the years, stepped up. One that I'm really interested in is a bid, which they're calling the People's Bid for TikTok, by an organization called Project Liberty, founded by Frank McCourt. And their whole shtick is to try to put better data governance and better policies into social media by buying TikTok. So I think that'd be quite a coup if TikTok, this national security threat, could somehow turn into a democratic good social media platform while retaining its user base. So that would be such an interesting purchase, but undoubtedly there will be others. There are rumors about potential Musk purchase of TikTok. He hasn't really said much about that yet, but I don't think we'll see the end of it anytime soon.
Lindsay, is it the case that TikTok is just better at helping content creators monetize their products? Katie bought a gift recently for her husband on TikTok and was very happy with the experience.
It actually wasn't delivered, but...
Oh, no?
No.
Okay, so I had a pretty awful experience buying something on Instagram, too. But
yeah.
Is one better than the other when it comes to actually doing commerce on these platforms?
Well, TikTok has been really successful in helping creators grow their user bases and, yes, potentially translate that into commercial transactions. But where I think it really shines is in growing the following, in allowing any content from anywhere to really go viral. And the tricky part is it's a bit opaque as to what content goes viral, but it's highly unlikely that content that's ultra critical of the Chinese Communist Party, that mentions sensitive topics that China doesn't want to hear, will in fact go viral. But I think that virality coming from anywhere, the ability for our creators to build their user bases, perhaps more than the nuts and bolts of the e-commerce transactions, is really what's seen its popularity rise. And I also think where TikTok started, which is this platform of just fun and games and cat videos and lip syncs, was a way that it could really attract a user base before it got into the more serious topics, political topics or commercial enterprise.
All right, Lindsay, got to leave it there. Really appreciate, of course, your reaction. That is Lindsay Gorman of GMF. Meanwhile, we take a quick check on these markets here. We are at session highs for the S&P 500, up by 1.1%. You take a look at the NASDAQ 100, big tech in charge, up about 1.6%. NVIDIA is your biggest contributor to the upside, up about 3.3%. That is lifting the entire market right now. And the bond market, we're back to unchanged on the U.S. Treasury 10-year yield. I don't think it's necessarily reacting to the TikTok news, but we've seen that bid lessen for the bond market over the past 2 hours.
If you feel like you haven't heard enough about TikTok, don't go anywhere, because in the next hour, Bloomberg Technology is going to give you a full special on the future of TikTok. They're going to be joined by analyst Gene Munster. And then Monday, catch our special coverage of the inauguration.